Hello, once again, David Moore with Equity Advantage. And today's question is, are 1031 exchange options only for large-scale investors? Second part, how does an exchange accommodator help smaller investors? Well, I guess part two sort of answers part one. But 1031 is one of those things. It's been great, been around since the 20s. It's one of those tools that is for every everyday person. I mean, you don't have to have a lot of money. An exchange is very inexpensive. When we started Equity Advantage in 1991, we charged $1,000 to set it up and $500 for each additional relinquished or replacement property on a simple delayed exchange. Today, for years we actually went to half that price as the market changed. In 90, 91, there weren't many companies around. You had a lot of people come into the game, and through the 90s, the early 2000s with the crash, we had a lot disappear. But really, the cost of transaction's nominal. Typically today, you might be looking at $750 or so to set something up for a delayed exchange. So it's one of those things that you don't have to have the high-powered lawyer to get the transaction done. You don't have to have the CPA that you're paying the big dollars for. We always want you to have these people. I think to be successful, you need a good team of competent professionals, people you're paying for opinions, not people you're paying to learn on your behalf. So those people are definitely indispensable, but it's one of those things where it's not this big secret. 1031's not a secret. It's been around forever. Unfortunately, still people don't understand that it's here, and we still have transactions where people are calling up the day after something's closed and it's too late. But in general, most of that world, the investment world's aware of 1031 and what it's done and helping people grow on their investment portfolios. A lot of time, people's first investment properties are their primary residence. They have it, they move out, and if they keep that property as investment for more than 3 years after moving out, assuming they were there for more than 2 previously, they would have the ability to use Section 121, the universal exclusion, on a home sale if they sold within 3 years of moving out. But after that property is an investment. And they're going to typically snowball that into maybe you get out of the one single family rental into a couple, and you end up in a plex, and you end up with an apartment, then you end up with industrial or something else is sort of the typical MO of the investor. But it's great because anybody can use it. We've got transactions that might be $20,000 in gain on a $50,000 property, $30,000 property. Believe it or not, they still exist, just not on the left coast, west coast. But as you get bigger, small, large investors, hey, if you want to keep your money yours, keep it growing, 1031's there for you. And unfortunately, we lost personal property with tax reform. And I think that was a situation where everyone was saying, hey, we don't want to have the wealthy take advantage of this stuff. So they're thinking, okay, personal property, cars, planes, stuff like that, the one percenters. And maybe that was true for a lot of those. We had a lot of fun doing some high-end stuff. But today, at least we've got 1031 for real property. So use it while it's here and keep building your portfolio, keep your money yours, keep it working. And, it's a great tool, whether you're talking a delayed exchange, sell first, buy later, reverse exchange where we're buying first, selling later, or doing improvement exchanges where we're going to go out and buy something and build exactly what you want. All those things are great options for people. They're all going to help you get where you need to go. No such thing as a dumb question. Call up, ask, talk to us about what you've got going on. We're happy to help you out. We might have a situation where you're combining a portfolio property into a single property. We call those blended transactions. So what would happen in that scenario is we're going to have a series of properties sell before the acquisition happens, make the acquisition, whatever in that portfolio that is yet to close would then come in via reverse exchange. So we can actually combine a delayed and a reverse and stretch out the entire timeline to almost a year, get those things done. Keep in mind reverse exchanges. We've got safe harbors that are there. Some of those rules are not hard, fast. We're delayed. We've got pretty rigid guidelines that keep things in place. I will argue that I doubt there's 100 questions with black and white answers in this tax code. It's rarely a question whether you can or can't do something. It's how you're going to do it. So really, when you've got questions, you've got ideas, call, ask. I mean, that doesn't hurt you anything. There's no cost or obligation. We're happy to discuss transactions, whether they're past or present or current, future. We're going to work with you and help you hopefully get where you want to go. But once again, I thank you very much for your time today. Hopefully it was helpful. And please give us a call, 1031exchange.com, Equity Advantage. David Moore signing off. Thank you.